Hello everybody, welcome to TraderMerlin Show. Glad to have you all with us. I see we've got our usual group and some from all over the place. Simon and Tarzana, good to have you with us. We got NJ from NJ, Chelsea Football Club. Oh, it was a great game when I saw that one. Hello, Kutut down in Indonesia. Sue and Les competing for first place. Looks like Les beat you today, Sue. Sorry, you just got to get here by 3 a.m. to beat Les to the show. Anyway, Boss Poopa, Mario, Gary, Lori, Eric, Frankie Shops, Big Ab, good to have you guys all with us today. Lisa as well as Brian. Good day, everybody. All right, so today's show, again, is just simply because of listener questions. Actually, this is not an area that I don't usually trade auto stocks, although I have nothing against them. But the data lately has been just all over the place, and I had a couple different questions regarding car data, right? And if you pull the curtains back, it's actually kind of a very interesting story with regards to prices, as well as what the future holds for companies like Ford, Honda, Toyota, maybe even Tesla, NIO, and Nikola, things like that. So I thought that'd be a good topic for today's show. I have a great graphic here saying the car sales plunge with some ominous red arrow pointing south, and that would be our topic du jour. Now, before I get into the cars and automakers and go through a whole bunch of crazy stuff, I will go through our overall markets and talk about what happened out there today, because to me some of this news was not very good at all. We'll start things off with your earnings calendar. This is what happened today. I'm still waiting on the number from Roku and Western Digital, but you can see pretty great across the board. Marathon Petroleum down near the bottom had a great blowout on earnings. They beat almost by 50%. Yet they were down almost 3% on their share price. Etsy took a big hit today. So even though it looks like everybody here beat, almost everybody did beat on the screen, the only one that was up on the day was Electronic Arts, up 4%, and they tied earnings. And then the other one was Amedisys, AMED. They beat by 3% on earnings, and they were up 0.3%. Everything else was down on the day. And specifically the one I want to focus on here is General Motors, up near the top, third from the top. They were expected to earn $1.89, came out at $1.97. So, hey, you know what? We're beating earnings. Yeah, they beat by 4%, and they're down almost 9% in the after hours. So, well, actually on the day. So we'll see how those numbers stack up. Here is your economic calendar for today, and the stuff I'm focusing on here for today's session will be in this middle. The main one is that USD ADP non-farm employment change. They were expecting there to see job creation, right? Expecting it to go from 680,000 jobs to 695,000. So not a huge increase, but nonetheless, they were expecting 15,000 more jobs to be created in the U.S. Not only did we not go forward, we were like less than half of our expectations. Came out at 330,000 for ADP non-farm employment change. This is not really a good day. That is a pretty bad number, and I'm really surprised that we didn't see a bigger stress in the markets. You know, having the S&P down 0.4%, it's really not that big a deal when you have that big of a jobs miss. And I think part of it is they're just expecting the Fed to bail them out again. Keep going down the list here. Your final services and PMI numbers were actually fine, was pretty much in order. The other one here was crude oil inventory. Supply jumped pretty good. We had a nice jump up in supply, went from a contraction of 3.2 million barrel expectations to a surplus of 3.6 million. So that was a nice catalyst for some sell-off today. Made a couple nice trades on the CL futures contract, which pretty much made my day. Done. Move on. Hood. What are we talking about here? Hood. Oh, Mount Hood, HMS Hood. Harry Hood, the song by Fish, one of my favorites, by the way. So we move from there to our listener questions. I'm going to start right here. This is just the blanket statement that kind of started it. Lee's been asking me some fun questions over the past few months. Can you talk about the automotive industry? I see so many conflicting opinions and data. All right, this is actually a pretty challenging one because we are in this very bizarre period where so many different factors are influencing the auto industry. Of course, we could cite the COVID drawdown where nobody was really buying anything, all in financial lockdown. Then you could look at things like the chip shortage, which is really creating a supply crunch and making it difficult to even get the vehicle that you may want. So all of a sudden these standardized, and I say standardized very loosely, right? The standardized meaning in a normal market condition, summertime is a period of time where you get Toyota-thon, 0% APR for 60 months. You know, all the sensational stuff tends to happen in the summer because they know they can just unload cars like crazy, so they offer great financing rates. Unfortunately, you're probably not going to be getting great financing rates when rates have been rising pretty quickly. It's a risk to the car makers to be lending out at such low rates. So there aren't really those rates. Zach, I haven't even said anything good yet, and he's already giving me some money over here. Thank you, Zach. Appreciate that. If you got questions, fire away. I'll give you priority on the question front today, Zach. Thank you very much for your contribution. So, to give you a simple example, my girlfriend and I were going to buy her a car, and she wanted a Toyota 4Runner. And we went down to the Toyota dealership where I bought my truck from, and the sticker price for a brand new SR5 two-wheel drive, not even the four-wheel drive fully loaded everything, but just the standard two-wheel drive 4Runner was going for $42,500. And out in the parking lot, we saw a couple 4Runners that were for $40,000 used. And I'm thinking, wow, that seems pretty crazy. I can buy a used one for $40,000 or buy a brand new one for $42,500. Let's go for the $42,500. So we proceeded to talk to the guy, and he goes, "Oh yeah, if you want the one on the floor, you're gonna have to pay between $5,000 and $10,000 over sticker price." I'm like, no, we'll pay sticker price. Matter of fact, I don't ever pay sticker price. I want to pay less than sticker price for my vehicles. And what's interesting is it's been the sharpest increase in used car prices on record. I mean, it's an unbelievably sharp jump there with regards to numbers. And I think I have some graphs here to help validate this and show you some of the data. So to put it in perspective, if you look at the average used car price in 2020, now this is according to Edmunds, right? It was $20,942. If you fast forward 1 year and just go 1 year in the future to 2021, it's $25,400. I mean, that's almost a $5,000 increase in 1 year in the average used car sale. That's crazy. I think Edmunds said that's the highest it's seen in 40 years. The used car prices, the highest it's ever seen for used car prices. Pretty amazing to see such a. I didn't want a 4Runner. I have a Toyota truck. She wanted a 4Runner, but she ended up getting a 4Runner. But bottom line is, we paid a ridiculous price. And as I'm sitting there with her doing all the paperwork, the guy turns to me and he goes, "You sir, what kind of car do you have?" And I go, "Oh, I have a Toyota Tacoma double cab, 4-wheel drive, TRD off road." And he's like, "Oh man, you got some equity built up in that thing." And I'm like, I don't think about buying a Toyota. Like, I understand, like a Ferrari, buy myself a Lambo or something. I might have some equity built up because of scarcity and supply and demand for luxury vehicles. But this is a Toyota pickup truck. And what's interesting is I could actually sell, my truck's a 2016. I'll get a new one next year when the Tundra rolls out. But the price I could get today selling my used 2016 4x4 Toyota double cab TRD off-road, I could get more money than I paid for that truck, which is absolutely crazy. And that is just the testament to the chip shortage, and then all of a sudden this run, because what's happened is new car prices have spiked so much. Now, you would think that based off those numbers, these car makers would be absolutely killing it, right? They just through the roof. Well, I mean, I had the number up there for GM today. We could pull up some of the other ones, but here is, you can see GM's earnings announcement. There's GM. Yeah, they beat, but they didn't blow it out. They came out at 197. The expectations were 189. Okay, fine. No big deal. But what's interesting is what's going on the price charts. And I'll look at a lot of these price charts here. Well, let's just go look at the price charts. Why not? So here's General Motors. And really not looking that good. I mean, you see General Motors suffering big time on that big drop today. It was down about almost 9%. Average volume is about 16 million. We traded 68 million shares today alone on General Motors. And you'll notice that even with these skyrocketing prices for new and used cars, which I'm sure dealers are selling both, their profit margins should be getting bigger and bigger, yet it just is not panning out that way. The numbers aren't looking that great. So kind of interesting to see what's happening with General Motors. We could look at Ford as well. Same thing with Ford, right? You had that huge run up in early May, and then just been slowly drifting down and dropping and dropping and dropping. So I thought that was interesting just to show you, because you would think that based off this information, things would be just skyrocketing with regards to earnings. Now, what's noteworthy for me, though, is these are the major two domestics, right? Ford, General Motors. If you look at something like Toyota Motors, they're pretty much at all-time highs and looking very strong. If you look at something like, let's go to Honda, HMC. Here's another one, all-time highs, looking very strong again, and that trend is just intact and kind of moving up and up and up and up. Big Eb says GM had a $1 billion charge for the Bolt EV issues plus crappy guidance. Yeah, and they also talked about what was it? I believe the numbers were they're expected, or sorry, this was from Ford. The number I read from Ford was they're expecting to lose $2.5 billion worth of sales because of the chip shortage. Now, if Ford's in that boat, GM's right there as well. So it's the guidance, I think, that's all of a sudden really starting to drop the forecast for it. And what I love about this is it ties right back to John O'Donnell's talk track forever, which is what is the cure for high prices? Higher prices. And what we're seeing is while the dealers may be charging a premium for these vehicles, they're selling a lot less. So let me show you that chart again so you can see the actual vehicle sales. There is the vehicle sales numbers, full screen. So as you look at this one, yeah, we're nowhere near the lows that we saw back in 2008 or even that pandemic low in 2020. But notice the about face, the abrupt about face on the hard right edge of this chart. We're still growing, but the numbers have dropped significantly, and they've dropped down below when things were really robust. You look at 2014, 15, 16, 17, 18, we were all above, pretty much the entire time, was above 17.5 million units. Now all of a sudden, it's looking weak, and we're dropping pretty quickly down towards that 15. And here's a closer zoom in, seeing that 8.9% slide in, I believe this is annual. I got to get the exact time frame what this is, but this is the kind of showing vehicle sales percentage declines and increases over specific periods of time. So very interesting to see the huge numbers that they're getting for their vehicles, but they're selling a lot less of them. So this goes back to my argument about OPEC, right? Would you rather sell a lot of oil at a much lower price, or would you rather sell a little bit of oil at a much higher price? It really depends on what your business model is. For OPEC, I think it makes sense for them to sell a lot less oil at much higher prices because their oil will run out. With regards to vehicle makers, Toyota, Ford, Honda, and that, right now supply is constrained. We are seeing challenges. Can't really find the vehicles that you want. Certain vehicles are getting a huge premium. I think if you have a Ford Raptor, that's one of the more sought after. The big trucks are really kind of the ones that are really getting the premium dollars out here with new car sales. But eventually what will happen? It's about knowing when you're buying something too high, right? The car market right now, I would say, is exactly like the stock market. Prices of vehicles have gotten way too high. So if you can, just wait. Eventually what will happen is these dealers have been ordering and ordering and ordering. The chip supply will get back on track, and all of a sudden they'll have a big supply of vehicles, and now they'll go in there and they'll say, $42,500 for that Toyota 4Runner. I'll give you 35. You take that, and they might give me 35, but maybe I get out for 38, 37. I'll pay less than sticker price for the vehicle, but it's about market timing and things like that. So, Lee, I think it's a good question. You do see a lot of confusing data and opinions because some people feel like the car makers are doing great because the prices are so high, and therefore their profit margin should be greater, but they're selling in much lower quantities. What else did I have here? Heather, on that note, you sent in this question, which ties right into it. Buy Ford at $13 with a question mark. So, that's one of the ones we talked about a few weeks back. I'm not a big fan of it. We'll take a peek at this price chart right here. You look at the price chart of Ford, overall, grand scheme, let's start on a weekly, work our way backwards. So there's weekly. Yeah, it looks amazing. This looks like it's just a pullback on the bigger trend. And I think it really depends on what your time frame is. If you're a long-term investor, I got to say Ford looks fairly decent, right? Higher highs, higher lows, buy the pullbacks. But if I switch this down to a daily, if I'm a swing trader here, I'm really looking at that trend from June through where we are right now. It's gone from over 16 to right around 13.30. Well, that's a pretty decent downtrend. And Heather's question about buy at 13, well, let me throw a line on the price chart at $13, and you make your own choices here. I think the first time it came down and touched it, which was about 3 weeks ago, yes, I would have said yes for a couple reasons. Number one, you had a pretty big pullback. You had into an area where it's called a rally-based rally, and you also had higher volume, higher than normal, slightly. So I liked it the first time, but now we're coming back down to 13 again. You've already taken away buyers from that party. The people who you're expecting to hold price up, they may not be there anymore. And with the negative guidance from some of these automakers, like General Motors today, their guidance was not very rosy for the future here. Of course, a lot of it revolving around chips. So I don't know if I could say to buy it at 13. I think what I would tell you, Heather, is if you're looking at buying at 13, then you better make sure that you put a stop loss at something slightly lower than that. So, maybe your stop loss is at $12.50, right? Risk 50 cents. Again, that's up to your risk. You're going to have to figure out exactly how much you want to risk, which is your stop loss times the quantity of shares that you're trading. But that said, it's a good a place as any to buy. Actually, I think it's probably better than some of the other ones you could think about buying, but it is certainly showing some weakness at that $13 spot, and I think that the trend is down on this on the shorter term. So as a swing trader, I would be more inclined to stay short. Brendan says Tesla is the future. Well, I think Tesla is the present, and I really love what Elon Musk is doing. I watched a TED Talk from, I think it was a TED Talk. Maybe it wasn't a TED Talk. It was basically the guy who's in charge of the AI for Tesla on stage with Elon Musk, and it was mind-blowing. I mean, what they were presenting, I was just jaw-dropped, and it really made me have a respect for what they've done. But remember, if you can get other companies who had deep pockets to begin with, your Toyotas, your GMs, your Fords, to compete head-to-head, it could pose a serious threat. Not that they're not going to be the leader going forward, but it won't be as smooth sailing and clear cut. I mean, right now, you just mentioned Tesla, and everyone goes, oh, that's the go-to for your electric vehicles. I saw a great video last night on the new GM Hummer, that the electric one, and the Ford Lightning. Some great vehicles out there, but yes, Tesla may be long-term. We'll look at those charts too. So the last question I had, actually, I won't get into this one yet. It's about buying new versus buying used. Let's take a peek at some other price charts here, because I think it's rather interesting, especially for somebody who's looking at buying into the automotive industry. And let me real quickly read some of these questions. I saw some question marks here. Let's see. Remember the Super V recovery? Yeah, I mean, it incredible Super V. Yeah, no Ferrari ladies for me, bud. Unless she's got the Ferrari and the money, then she can drive whatever she wants. GS will be a charge. Let's see. Used car prices are this high. What about consumer debt? Yes, you're seeing all of it really high. Although, it's interesting because consumer income has also been surging as well. Unfortunately, I don't have those charts here handy to show you, but yes, this consumer income has been rising as well. All right, let's go to, are there any questions? NJ says at 12. Okay. I would feel better buying it at 12, right? It's something that's fresh, hasn't been tested yet, and it's the origin of a gap. So yeah, I would prefer to buy Ford at 12. And again, what we could do is you could go out there and be selling some puts for Ford at $12, collecting that premium, and if it gets there, you're long. If not, you collected premium along the way. All right, so these are the two weakest that I see right now is General Motors and Ford. Oh, actually, that's not the weakest. The weakest is probably the dog, the steaming pile of dog that we talked about a couple of years ago, a year ago when we started the show, which was Nikola. There was another question about Nikola stock. Look, I'm not a fan. I mean, I think that there might be a place for Nikola, but look at the price chart. This is one that is just really, really ugly. For those that remember, we were talking about this back in May and June of 2020 when this thing was up around $90, going, it's going to go down, and it's now stuck at about $10, which it might actually be near its all-time low. Its all-time low was this day on the 22nd of April, which is $10.30. You're currently at $10.60. So this one is a dog. I don't know if it'll make it long-term. Their vehicles look great, but they've had all kinds of issues there. So I would go from Nikola. We talked about Ford. There's your Ford chart. General Motors as well, looking really weak. I actually would, if I had to choose here, I would take Ford, because look at what GM has done since. Let me put a vertical line here. Let's really say what it's done since the beginning of the year, right? It really hasn't done much. It's really been stuck in this wide range. Now, if you look at what Ford has done, you're looking at a much clearer uptrend, and it actually looks like a pullback now into some demand zone. So big picture, I like Ford better as a long-term hold, and of course I think the F-150 Lightning and the Ford Mustang, which is not really a Mustang, but that E-Mach might do really well for sales for Ford. Now you look at something like Tesla, which is the love of so many. Been looking. Oops, not TLSA. How about TSLA? Yeah, Tesla's trading at $2. Totally kidding. TSLA. There you go. It's had a great run over the past 5 days, right? We're back above $700, $710.92. But, is this the next leg up? To me, it has to get above this high that we put in on the 14th of April. It just has to get above 775 and a close above 775. For me to really think this has got more legs on it and it's going to start its next run. Chart doesn't look that great, right? I think most of the excitement happened back here in 2020 when you had the split and then you had the addition to the S&P 500. All right, now you have an influx, a massive influx of competition. You've heard, yep, I know, no, see, he is going to jail for fraud. Oh, well, he might go to jail. If he's smart, he's going to go to jail with a lot of money. Yep, he fraud charges, Mario. He's going to jail. I don't know how long he's going to serve, but Look, he's probably going to go to some country club with a couple $100 million in his pocket, so it doesn't sound too bad. All right, next, that was Tesla. I wanted to look at NIO, for example. This is one that we talked about a long time ago, and it kind of has a similar shape to Tesla, right? And again, it's one of the main darling stocks from China in that EV space, and there's a lot of them in that EV space that we could be bringing up. But I wanted to bring up just a couple of those to mix in with the standard ones we look at, like Toyota Motors, which I think is probably Toyota and Honda look the best. You know, you have just beautiful uptrends, nice volume with no big surges, which means you have slow building of interest in there. And right now, it looks like you're doing a double top. If it does break down below 173, 172, right below here, let me put a line on it for you. If it gets below 173, then you might have a little bit of reversal. You see a couple unfilled gaps off to the left there, but all in all, Toyota looking absolutely fantastic. And you look at Honda, HMC, bigger picture, longer term, it looks great as well. Really, since 2020, it's been on a beautiful trend, but what hasn't been on 2020? Big Ab, yes, I agree, 100%. He says owning Chinese stocks long is risky. Owning Chinese stocks, period, is risky. Different reporting. There's trust factors out there. There's nothing that's in my portfolio that's Chinese companies, and it's nothing against the country. It's against the rules and the governance and the regulations and how they report data. I just don't trust the data. You notice that when I do the economic calendar, I don't usually talk about Chinese GDP because who knows how manipulated and fake those are. We think ours are fake and manipulated here in the U.S., but I think that theirs are far worse. Let's see. If income is rising, then why is debt? Yeah, exactly. Brendan, we are a consumption economy, and I think part of it right now is at one point in the middle of the pandemic, the savings rate was one of the highest it's been in the U.S. Now all of a sudden, people I got money in my account. I want to buy some stuff, and that's what's fueling this nice big run here. But that won't last forever. What else? Let's see what else I have. I wonder when the chips arrive, will the car manufacturer ship the whole lot of inventory to the dealer and prices drop? Well, it's not that they're shipping specifically chips, right? The dealers aren't sitting there waiting going, hey, give us the chips. It's the manufacturers like Ford and Chrysler and GM who are saying, we need these parts. We need a GPS system, or we need a nav system for the F-150. Oh, well, we can't give you that right now because it needs these chips, which we don't have. So, and where do you think those nav systems are coming from? They're most likely coming from China. So we're just waiting for that backlog to show up. And remember that COVID shut down so many factories over there. I think that was a major factor in it. Once we get back online, then yes, things will, I think, ramp up rather quickly. And I think, personally, we'll be somewhat flooded with inventory. But that's just my 2 cents. And again, who knows? If in fact consumers are saying, I don't want to buy a new car right now, and we get a flood of inventory next year, well, you'll probably have increased demand for it as well, and prices might maintain the same level. So there's a lot of variables out there that are just beyond me, and who knows? I can speculate all I want on what those numbers are going to be. But right now, I will definitely be waiting to buy a vehicle just because of the prices. Lufthansa says Walmart is a Chinese company. I'm pretty sure that the Waltons would have something to say against that, but yes, you're right with regards to almost every product. Like all their products are coming from China. So it's an interesting business model, isn't it? It's I'm making like a penny profit per item, just barely making any profit per item, but I'm selling in such scale. Well, we could say that China is killing us in many respects, and I don't want to shift this down to a political discussion, which could easily happen. We could say that China's killing us in many areas, but I think in a lot of aspects, we're killing ourselves with some of the things that we do. There's a lot of, in some areas, overregulation. I think that there is a lack of unity and focus on what would actually make America better. I mean, honestly, if all of us have different viewpoints and political views, but I'm pretty sure we could all get in a room and give us, let's say, a week. And if I gave us $100 million and we had to spend this $100 million in a specific way, I'm pretty sure that all of us, and right now I got 69 people in here, that all of us could agree. Now, I'm sure some people are like, well, I'd rather it go here, but you know what? I agree for the greater good. We could all agree that there is a good way to spend it. But in this sense, you have one party that hates the other party that won't get anything done. You have people like Brendan who says that Biden's killing America. You got other people who says Trump's killing America. Who cares? Its bottom line is they'll prevent something from happening because the other party says it's good, and then vice versa. One party says, "Hey, we're going to push this through," and the other one says, "No, we're not going to. We don't want that." total BS, right? I think in many areas we are destroying our own country by just bickering and saying, oh, well, I could never support a Republican or a Democrat point of view. That's crap. Let's just do what's good for America, period. Not forget my political party and say this is what's best for America. If we did that, then I think we'd be in a much stronger economic position. But unfortunately, we hold these political values too high, and we can't deviate or change our mindsets whatsoever. Anyway, I'm well aware of that, Brandon. I'm well aware of that. Let's see what else we have. All right, so there was one other question that came in which I thought might be interesting, and I think it kind of talked about this one a little bit. Kevin, you sent this one in, which I thought was kind of funny because it tied into the recent car purchase you made. It says, it's not trading related, but when it comes to buying a car, which is better, new or used? Again, depends on the person. I would much rather buy, you're all going to hate this. If you listen to a lot of the financial advisors, they say you buy used. Buy used because by the time you drive it off the lot, it's worth 20% less. Okay, fine. That's okay. However, if you buy used, generally, let's say assuming you're going to have some financing there. If you buy used, you're looking at 6% loan, depending on your credit, 6.5, maybe 7, depends. If you have a used car that you buy, let's say 20% lower, but you're paying 7% interest rate for 5 years, or you buy brand new and you have 0% interest rate and you have all of the factory services and bumper-to-bumper warranties for the first 3 years or 5 years, whatever it is, where's that trade-off? A lot of people don't like owning a vehicle that somebody else has driven. Yes, you could buy it cheaper. If you were going to pay cash, I'd say buy used. Just because buying used, you're going to save that 20%. But if you're doing any sort of financing, to me, that absolutely weighs into it. I actually like buying new. And just because I get all the services and protection. I know my vehicles will drop, but I also buy vehicles that aren't historically known for losing tremendous amounts of value. So, Kevin, I think it really depends on what you want to buy. Again, I would say right now is not the time to be buying. I'd probably wait 6 months or so, and hopefully we come out of this pandemic a little bit better and we start putting those chips back in the devices that need them, and all of a sudden we have cheaper prices. Sears says, I always buy used and pay cash. Right, that's probably the best way to do it, but I love having the full security of the dealer stuff sometimes. So my previous one was brand new. The one before that, I had bought used. And yes, pay cash all the time, unless you're getting 0% financing, right? If you get 0% financing, then take your cash and use it for something else where you can get a greater rate of return. I mean, even if you had 0% financing and you put your money in the bank, you would still be making 0.1% interest. Therefore, you were earning money on capital. So unless you're getting, 0%, it's not worth, or maybe 1 or 2%. Yes, I agree with you, Gary. There is definitely something about a new car smell. Oh, man, my spine's tingling just thinking about it. I know they put some chemicals in there. Buy demo, they're going to... Oh, yeah, you mean the floor models? And actually, one of the other things, get yourself a BMW. Yeah, Tim, get yourself a BMW. You can spend a ton of money on your repair bills for a BMW. Coming from experience over there, right, buddy? When holding an option position, a debit or credit spread, do you have to worry about dividends? I don't know. Sorry, Zach. Don't know. I'm not a spread guy. I don't know. I usually have options guys on here that know way more than I do. Except for Tesla, I buy pre-owned certified. Yeah, and this is another interesting one. When you look at things like Tesla or these new technologies, I've been very scared about buying new technology just because it's still in a discovery phase. Now, granted, it sounds like Tesla's mastered it, right? They've got it down. It's been around for a few years. And yes, they have some pretty bad consumer reports numbers. But as far as the battery and the engine goes, fine. It seems like the other stuff is just kind of not cosmetics per se, but some electronics and different things aren't quite working properly, and they get very, very low. What was it, Tom? You were mentioning they were like number 1 out of 20 or number 25 on the list, which is one of the worst of the automakers in the U.S. with regards to reliability or something like that. I remember you were telling me about the stats there. Oh, T-Bar says, I wish you have a show 1 hour later. You know what? I don't know why I chose 2 o'clock. I kind of wanted to do it close to the end of market. That's just kind of when I chose to do it, but who knows? Maybe we'll modify it at some point. If I do ever change it, it's probably going to have to be outside of regular business hours, which means before 6 a.m., which ain't going to happen for me, or after 5 p.m., which would really mess up a lot of people here, I'm sure. Oh, thanks, NJ. You're a regular contributor out there, bud. Thank you so much. I appreciate it. Quote me later, huh? Brendan says Bitcoin's going to 200,000 way sooner than anybody thinks. Well, I'm still sticking to mine of 100,000 by the end of next year. I'm pretty confident in that. All right. What other questions you guys have? Now it's time. Let's see. Unfortunately, I don't know the options to answer that one for you, Zach. I don't see any others that are pertaining to the auto thing. Cool. Well, let me show you what's happening for tomorrow. Unfortunately for you guys, I won't be able to do a show tomorrow. I have to drive to LA to pick up 5 electric bikes. I was hoping they would deliver them to me, but I will be going up there to pick these things up. You have to pick them up by 5 o'clock. I'm like, I'll be there by 5 o'clock. So I got to cancel the show tomorrow just to do that. But he says, I leased a Civic in 2018 and sold it to Carvana last month in May 2000. Yeah, that's pretty crazy, right? It's weird that you could actually do that. When the guy told me that the equity in my truck was so high, I was like, wow, I should sell my truck right now, buy a little beater for a couple of days, and call it a day. Brendan says, what about them psychedelic stocks? Well, what about them? I mean, trip out on them. I told you, I think I'm a fan of them. I think that there's a lot of risk to psychedelic stocks just because of regulations and things like that, but I think that as a portfolio, why not have a small amount? If it's something that you're into. Brendan, you like to do things a little bit heavy, so you probably are like 50% in psychedelic stock. No, you're 50% crypto, 50% or 45% metals, and 5% hallucinogenic companies or psychedelic companies. Great, fine. I think that there's a risk there, certainly from a regulatory environment. Actually, what's interesting? I want to show you guys one more thing, which I thought was noteworthy today. I remember this company came out a while back. They did an IPO several months ago, and we're talking about their new technology, where they basically was like this film that's like this. It's as thick as Saran wrap, but you could use that as a screen. And they were talking about having these flexible devices and foldable everything. It was like, wow, this looks really, really cool. And a lot of times the expectations far exceed the reality and the deliverables here. Check out what happened to this company today. This is, again, going back to a comment I made a while back where I talked about do not buy into companies that have one product, especially when I meant by that was usually pharmaceuticals. But here's this company. It's called Zymergen, ZY is your ticker symbol. And you'll notice today, this is a couple months old. Really not that big of a history. Price chart really wasn't great, but look at the volume today. The volume was 790,000 shares per day average. They did 21.6 million today. They fell 76% in one day because the one product that they have, they basically said one of their biggest clients or applications is not going to work. The CEO resigned. Obviously those are two very, very, very bad things. But they were struggling to get acceptance for their product. It just wasn't going. Now, the reason I bring this up is you look at Zymergen, and a lot of people would be thinking, man, $8, I got to buy this. I mean, it was up at 45 just a couple weeks ago. It's going to get back to 45. It might. This could be one of those things that takes years to get back up. Who knows? I don't know the company very well. I just remember the talk about their technology, and it sounded great. I mean, imagine like a bracelet you could just slap on. Remember those bracelets as kids? You could like snap them on your wrist and they would just adhere. Imagine you just slap it on your arm and you now have a fully touchable, interactive device that could be your phone, could be a TV, could be a remote, could be a rocket launcher. Who knows what the heck you have? But you could have all that stuff. So I thought that was kind of interesting technology, but clearly this was a surprise. And if you look, I told you I'm kind of doing a little bit of a research behind the scenes on insider trading. This one, nobody knew about. There was nobody who knew about this one. Here's how I can tell you. Let's look at a 1 minute chart. We'll look at 1 minute, and I will show you the difference between today's opening volume, because obviously the announcement came out over the weekend. So here's its price chart from yesterday, excuse me, not Friday. And you can see that its volume, very low. I mean, it traded 500 shares. And then all of a sudden, it opened up the next day with 9,000, let me take that back. That was average volume. It closed its final 1 minute bar with 2,600 shares traded. Its opening bar was 428,000. And normally when you have insider trading like this, you'll see spikes leading up to it. So I'll go out and get rid of that big spike. There really is nothing here that would scream that this thing had any sort of insider trading at all. There's a couple thousand shares traded, no big deal, but I have seen some other ones that really showed very high volume, and when I'm ready, I will bust all those out and show you guys, because it's pretty clear when you see insider trading. But this one, this caught everybody off guard. Everybody off guard. But, do you buy it? I'm sure some people out there probably think this is a good buy. I probably would not. Just too risky, unless you have like absolute risk capital. Let's see, what else do I have here? What kind of bike? I forget the name of them. I'll let you know. I basically ordered them from China in May. I've been waiting months to get them. It's funny because my neighbors spent $2,000 or $2,200 for this same bike, and I'm getting them for about $800 a piece. So I bought a bunch of them just to be. Yes, it definitely Chinese. It's been on a boat for a while. Why does it smell like salt water? But I did a lot of shopping, a lot of due diligence. They seem pretty good. And I actually asked the lady, I said, how much for a container? I might buy a bunch if they're, if I know I can buy these things and probably get them down to $600 if I buy in bulk. There could be a business model there, but that's a totally different story. Let's see, what else do I have? Kathy Woods ARC. Ooh, man, she had 1 million shares, Eric, of Zymergen? Ooh, goodness. That's she got smoked today. Talk about, if she had 1 million shares and she's down on the day right around $27 million. That hurts. Notice when you know why something really went up, you often see publications give an incorrect narrative to justify the moves. Well, I mean, that's the problem I have with a lot of mainstream media, is they're generally trying to come up with an excuse for something happening. And of course, I do that too. I'm trying to justify a move that might happen in the market and look back and say, what were some of the factors today? Like today, I told you I was relatively surprised we didn't see a much worse market based off of the ADP non-farm employment change. I was watching that and I'm like, man, we should start tanking here. Now, fortunately, I was short on oil, but I really wanted to go short some of these indexes, and they just didn't really have the moves I was looking for. So, no, I'm not going to be selling these. I've got 5. It's just for friends and family, and a couple of people asked me to get them for them. So I'll be keeping those here. Obviously, having an electric bike in Southern California right near the beaches is a great thing. They're nice, fat tire, foldable bikes, and anyway. All right, so let's see. Let's talk about tomorrow. Tomorrow. No, not selling the bikes. Maybe down the road. If this really works out well and I find these bikes are great quality, I may actually order a lot of them. I mean, a full container ship would cost me probably close to $200,000, which, it's a capital expense, but yeah, we'll see. So here's what's happening for tomorrow. Earnings-wise, not a lot. I just put this up here just so you can see some of the major names. Probably the big one on here is Illumina, ILMN. That's going to be an aftermarket close. You also have Turtle Beach reporting earnings, Duke Energy, and that's pretty much it. Most of these aren't major names. Now, the economic front, if we look at, I'm going to switch that over. The economic front is a little busier, and there's a lot of big data going on there. I highlighted the U.S. stuff. Now, given the fact that ADP non-farm employment change was pretty bad, keep your eye on the Challenger job cuts. Now, that's not a major one, right? But it is a jobs number, as well as the unemployment claims, which come out an hour later. Unemployment claims come out at 5:30 in the morning tomorrow Pacific time, and expectations are that we're going to drop again. Boy, I tell you, if ADP non-farm employment jump like that, we'll probably see unemployment claims back above 400,000. I know it sounds weird, but we'll see. What else do we have? Natural gas storage. Oh, this is one. Boy, I tell you what, natural gas storage, the expectations are that we're going to see inventory dropping here, which, of course, for anybody who's watching at NG, take a peek at natural gas. I mean, it is the little engine that just does not want to stop. Here's natural gas chart for you. Today, again, ripping up even higher, 3.13% increase, ripping through some highs here, hitting that $4.20 mark. Of course, $4.20. I'm sure that makes Brendan smile. That obviously is very extended. Now, if I take a peek out and look at the weeklies, for example, you'll see that there are some supply levels coming up here, but one hell of a move, and those numbers coming out with regards to storage tomorrow could have a big impact on that one. He's called it like clockwork, huh? All right. Well, I just have to reach out. Oh, Tom, I was even asking you questions, buddy. I thought you were here the whole time. Tom shows up late. Boy, okay, guys, don't tell him the secret to making $1 million. Let's not let that cat out of the bag. Tom, you missed that one, buddy. Anyway, good to see you. I'm actually wrapping up here because I got a bunch of stuff to do. As I mentioned, no show tomorrow. Sorry, guys. Maybe I'll have my bikes on studio tomorrow. It's fun because I get to take them and customize them before I put them all together. But bikes tomorrow, and yeah, I got to reach out and get other people on the show. I'm boring you guys with just my conversation with just me. Anyway, that's going to do it. If you guys have any comments, questions, feedback, topics for tomorrow, again, I love the questions that came in. Thank you to those so Kevin, Heather, and Lee for the questions. I love you. You spurred a whole shop topic for today. Thank you so much on that one. If you have comments, want me to do a specific show topic, send it in at TraderMerlin@gmail.com. Hopefully I'll get to all those questions as well as maybe create a topic out of your question. All right, that's going to do it for me. Thanks, everybody. Have a fantastic evening. See you tomorrow.